Hello. Thank you to everybody for joining the 12th annual M&A Research Center Bayes Business School Outlook session. I'd also especially like to thank all of the Bayes students who are joining us and the alumni, and of course, a special thank to the panelists who you see on screen here. And I guess there should be a shout out to Matt from our events team, who's made this all possible for us as well. This is our second conference being held online. We would love to have been able to do this in person, as many of you who got the first invitation to the event would have seen we were going to be trying to do, but obviously the pandemic has made that not possible for us to be able to schedule, albeit in the event we probably could have actually held it in person had we been able to anticipate what's happened. There are more people who are signed up for this than we would have actually been able to fill in the largest auditorium that we have here at the university. So I guess in some sense, it is nice that we are able now here to have so many of you with us. It is a panel that is located mainly here in the UK, but extends all the way down to South Africa and the western part of the United States. That's made that possible as well too. Our agenda today, after this, what I hope is going to be a brief introduction, we're going to have a roundtable discussion with the panelists led by Susan. We will then have a Q&A for the panel from all of you, our participants, and I will mention to you how that will work. We plan to have the event complete around 50 minutes following the hour, whatever hour that is where you're located, in order to be able to allow any of you, if you want to get to another meeting at the top of the hour. Many of you who have joined us in the past will know some of the panelists. Several of them have been on the panel for many years. The detailed bios are in the brochure that was emailed to everybody earlier today. But Susan Kilsby is the moderator of the panel for the 11th time out of 12 times. Impressive, very impressive. And thank you very much, Susan. Susan is the chair of the advisory board of the M&A Research Center here at the school. Also joining us are Cathal Deasy, who's the global head of M&A at Credit Suisse, Cyril Auger, who's managing director at Ardian, Europe's largest private equity firm, Marie-Laure Carouse, who's the head of insights for M&A at Mergermarket. I mean, head of insights, we would all want to be hearing that. And Matt Wells, who's the VP Global Product Marketing and Strategy at SS&C Intralinks, who many of you working in M&A will know as well. Now, this event is governed by what's called a modified Chatham House rule. It is public information who's participating on the panel, but if anyone in the press or otherwise quotes, or that is, if anyone wants to quote or reference any comments by any of the panelists or their organizations in any media, you do need to gain their permission first. So please do contact them or contact me to forward that request to them. This will be recorded and is being recorded. The roundtable discussion will be available online in about a week to everyone who has signed up, as well as being posted to the business school's YouTube channel. Now, in terms of questions, when we get to it, if you can please type a question in the Q&A area that you should see at the bottom of your Zoom screen. That is the only way to post a question. The chat is disabled. I will be moderating the questions and passing them to Susan during the Q&A. If you have a question, I would appreciate it if you'd actually provide me with your affiliation, say a student or an alumnus, or if you're from outside of Bayes Business School, your company or media affiliation or whatever. So just understand the panelists themselves will not be checking the Q&A. So directing questions to anyone specifically, again, I will be moderating that and then being able to pass it on. So with that, I think, Susan, over to you.
Thank you. And thanks, Scott. Thanks for the introductions. And I wanted to thank you all who are on at home or wherever you are joining us. Thank you for being part of this. What I'd like to do is start out with Matt, giving us a little bit of backdrop as to what 2021 looked like. So we can then, once we hear that, we can use that as a launching pad to talk about what 2022 will look like. Matt, thanks.
Thanks, Susan. Happy to. I know this is largely an outlook session, but it's always good to kind of see where we came from over the past year. And in a nutshell, I think the term is record breaking, right? Anyone that's paying any attention to the M&A market, just saw records falling left and right across a number of different metrics. I think the biggest one is the fact that we surpassed 5 trillion in M&A value for the first time ever. That's a record, over 60% up from last year, 25% from the previous annual record, correlating to somewhere over 62,000 M&A deals. So again, up 24% from last year, where we started to see Q3, Q4 become really healthy quarters. And I think a few things of note related to these records. I think you saw private equity sponsors really come back strong. 32%, I believe, of global M&A volume was related to some sort of private equity involvement. That's again record breaking, up from 26% in 2020, and that's double from a volume perspective as well. And sectors such as tech, financial, industrials, energy, they accounted for bulk of M&A volumes. But if you look at industries across the board, by and large, volumes as well as values and valuations were certainly up.
Great. Well, thanks. That's very helpful, and that's a good place to start. I mean, we're record breaking everywhere, every industry, every geographic area. So let's start with geographies. How do we see 2022 playing out? Anybody want to talk about where we think we'll see the volumes coming from?
I'm happy to give a little bit of an indication. We published something at SS&C Intralinks called our deal flow predictor. And really what that is us kind of looking at our crystal ball, given that deals on our platform, are usually 6 months pre-announcement stage. So, we kind of have this unique look as to where deal volumes are going, where they're coming from. And in our Q3 deal flow predictor, which makes a prediction for Q1 of this year of 2022, we are seeing the majority of deals again being driven out of North America. We're kind of predicting a market overperform from a quarter over quarter basis over Q1 2021 over Q1 2022, and a very slight increase to neutral over Q4. And again, majority of those deals from an overperformance perspective, we're seeing in North America as well as Asia Pac.
That's great. Thanks. I mean, Carl, I'm interested with your global M&A hat. Historically, we've always been talking about the great promise of Asia. I mean, North America has generally led the pack, but what are we seeing, and particularly anything interesting coming out of China? And what do you think might be driving the business there?
Absolutely. So just to maybe give people a sense, right? So, Matt was absolutely right. We had, well over 5 trillion of announced volume. The Americas, 60% of that at 3.6, and then Europe at 2 billion, and then you've got APAC at 1.6 trillion of announced volume. So significant volume, and the volume was up 40% year on year versus global 62, so a little bit behind. So I think, look, Susan, we don't see any major change. I think, look, obviously for outbound M&A, which is probably what we focus on in our business from China, is somewhat muted, right? Clearly there'd be an ambition to secure technology, but FDI in various jurisdictions constrains that. Historically, we've seen China make large investments in real estate, but clearly with the crackdown across corruption and also just let's call it 5-year plan, consistent M&A, that has pulled back. And then before that, we saw quite a degree of M&A around resource capture, whether it be on the oil and gas side or on the commodity side. And look, we expect to see a strong bounce back in M&A in that area, more generally, and particularly from China. And we've seen them participate in a number of processes, particularly around the electrification of the world, that theme, and particularly assets such as lithium. But I would say, Susan, I think that's more at the at the smaller end. It's more of a niche trend relative to some of these bigger trends that we're seeing going on in North America and Europe. One trend we are seeing with respect to China, given you asked, is that a number of multinational companies that had onshore operations in China have decided that maybe the time is to hand those assets back to local ownership and then enter into joint ventures with their Chinese counterparties. So we saw that with Reckitt, which is a large consumer company here in the UK with their infant nutrition business, and also Deutsche Post, which had which has got the DHL brand, which did something similar. So actually, where people were going to China, we're seeing maybe a little bit of a reversal of that, and people looking for different deal structures. But again, niche in the context of what's going on more generally. I would say Japan, we continue to see Japan being active, and we would expect them to be active from the Asian market.
Great, thanks. One of the things that Matt said at the outset was there was a large amount of activity, obviously, in tech and in financials, really driving things, driving the activity. I wonder a view as to whether we're going to continue to see that happen, and then where else we might see activity. I don't, Marie-Laure, do you want to take a stab at that?
Yes, sure. So we've seen a lot of new technologies emerging in the last years that were accelerated by the pandemic. And in 2021, technology dominated in deal making, both for corporates and then sponsors. And that will continue to dominate, especially now with the increased challenges that corporates are facing in e-commerce and logistics. They will need to accelerate their digital transformation, and this will happen through M&A. And I mean, especially with supply chain disruptions, supply chain is a major driver in inflation, and retailers and manufacturers do see the risk of delays in supply chain affecting their businesses. So large companies, consumer and logistic companies, will be looking for solutions, and then will probably look into acquiring in this like supply chain software and hardware businesses so this will definitely accelerate investments and acquisitions.
Great, thank you. Go ahead, I did want to stop you.
Yeah, sure. I mean, another area in technology where we're going to see also like another trend to watch is the metaverse. We've been hearing a lot of 3D virtual world. And now that Facebook has promised to invest billions of dollars in the metaverse, it created a surge of investor activity where people can interact, purchase goods. So that's another one to watch. That's like a $1 trillion industry. And then from gaming is another one. Where we're also going to see probably a surge, and with the Microsoft acquisition that was, Microsoft acquiring the Activision Blizzard last week for $76 billion. So the gaming industry is now larger than the movie business. So that's a huge audience that will keep expanding. And then another one I wanted to mention is the buy now, pay later, or BNPL. So we've seen a lot of interest last year, and that will possibly continue in 2022. Large companies like Alphabet and Amazon could be consolidators in the space. But not only these companies, card networks like Visa, American Express will also probably be tapping into this market. I mean, there's a lot that we can talk about. Like there's the cryptocurrency space, which is now like very volatile, but that could see investments and M&A activity this year. I mean, even as prices remain uncertain, last year, the global cryptocurrency M&A totaled $24 billion. And the rising prices are fueling more interest from investors. So this year we might see more capital moving into the space as companies feel more comfortable investing in cryptos.
Thank you. Actually, lots of really interesting food for thought. As you were speaking, I was thinking 12 years ago, I don't think I would know what crypto or metaverse even meant when we first started talking about this. So it shows how much
whole new world.
A whole new world, lots of opportunities. Was there anything else anybody wanted to add to the outlook about industries where we might see additional consolidation?
Look, Susan, I would agree with everything on technology. I think we're seeing all trends, whether it be from semiconductors through to fintech, through to software, we're seeing it across the piece. I think the other trend clearly is that of electrification. We've seen a return to growth in the movement of electrons, which are exciting people, and there's many underlying factors for that. Clearly, climate change, reduction of carbon footprint, but also, and as a consequence, EV. And so I think that value chain and that industry is being, redrawn to a large extent. So it's another area that we're seeing, shifting sands from an ecosystem perspective, and as a consequence, we'd expect to see activity. And look, I'm sure Cyril can comment that we've seen private equity interest through infra funds in that space. Corporates are looking to restructure their own portfolios, and we're seeing the emergence of new industries and new companies to service this industry. So I suspect, again, when we think about industries, maybe the sleepy utility is very much waking up in what now is a much more dynamic industry. But I would say more generally, in the buoyant M&A market that we have, every sector's busy. I think it's a question of trying to rank which are busier versus the less busy.
Great. Go ahead, Cyril. Sorry.
No, just one small word saying that the private equity industry, I think, has been highlighting the same trends. Both in terms of sectors. Tech has been one of the main themes of private equity for the last years already, with prices going to the roof because of that. And even in terms of geography, I think the comment which has been made on US versus Europe versus Asia, in a record year, actually, Asia is the only region where the volume of transaction has actually decreased compared to 2021 to 2020. Sorry, for private equity, with a much reduced share of the entire PE transaction volume. So now, just to say that within PE, we see the same trend. I think COVID has changed a lot, of course, the way we were looking at companies, and tech and healthcare probably are the two sectors which have been considered as not a safe haven, but flight to safety benefited to those two sectors, I believe.
Great, thank you. And Cyril, I'd like to continue to follow up on the private equity theme, because it's really been, as we say, records all around. But we're about to embark on a year where we expect to see increased interest rates. And I just wonder if you could make some comment about how you think that will affect or may affect the private equity.
Yeah, of course. So without making the question too large, basically, increase in interest rate is obviously linked to inflation. So inflation as such is raising some challenges for the private equity industry. But if we focus on interest rates, I think there are probably two natures of impact. One being just how people are allocating money. And within the asset management industry, basically, low interest rate environment has made the money really flowing to some sectors offering higher returns, with fixed income generating very low returns. So the alternative assets benefited from that, and within alternative private equity benefited a lot from that. So a lot of money flew to private equity industry. And if we see interest rate rising in the future, it might make fundraisings a bit more complicated. So it will not be a change for the coming 1 year or two because of all the dry powder, which is already secured and all the fundraising which happened. But 2022 is especially for Europe, is an incredibly important year in terms of fundraising. Almost all the large cap buyout funds are on the road currently to raise money. And that makes this year quite crucial on whether or how the market will be in the coming years. And after that, if we take the PE business model as such, of course, so increase of interest rates is making the debt more expensive. And the pillar of PE industry is a leverage buyout. And of course, in leverage buyout, raising the cost of debt change the economics of transactions. So this will have to be monitored very, very closely. I think we are coming from a world where the debt was very cheap. We can operate in a world where the debt is slightly more expensive. Of course, which might be a bit challenging, as always, is a kind of adjustment period where with transactions which were not calibrated for debt, which is becoming more expensive. So that, of course, is a concern that will have to be monitored, and PE players, I think, are factoring that now very with great attention. Another point is, of course, on valuations. And that's affecting both LBOs and VC, actually. Increasing the cost of debt is increasing the WACC and the cost of capital in general, and it should impact valuation on the longer term. It's particularly true for the tech sector, where you may have a discounted value of the future cash flows, and it might affect the VC world and the entire industry as a whole.
Great, thank you. Thank you, very clear. Let me change the topic a little bit. Let's move to ESG, a very important topic and very active in all boardrooms, I think, these days. I wonder, how do you think that's going to impact the M&A business? How does it drive activity or not?
Just looking at, sorry if I hijack some other conversions, just to say that seen from the small scope of private equity, clearly ESG is orientating the deal flow and probably excluding some all the companies are targets as targets from PE players. The ESG trend is really crucial and has become more and more important over the last years. So there is a search for companies which are ESG well positioned on the ESG side or positioned on ESG sectors, and clearly yes, the M&A deal flow from the PE side is subject to ESG thing more and more.
You know, there's been a lot of pressure on a number of companies to divest certain assets. I wonder, because of ESG concerns. I mean, maybe Carl, you have some views as to what that means for M&A activity.
Yeah, absolutely. It's a great question, Susan. So I think, look, I think ESG, given the breadth of the trend, affects the M&A market in many different ways, as you said. So I think if we look at the corporate, I think in the first instance, people will look at their businesses and just say, okay, which end markets, indeed from a demand point of view, or that there are businesses that have got scope 1 or 2, or indeed scope 3 emissions that they feel that it is detracting from their equity story. And I think there's a real debate around boardrooms at the moment as to whether those assets should be sold. Clearly, there's a debate to be had about what cash proceeds you can realize, or do you spend that to your shareholders? And does it make sense from a valuation point of view at the current point in time, even though you may feel from a climate strategy point of view, it makes sense. So that's a very real debate. The other associated part of that debate is that boards are very cognizant of not being seen to be, greenwashing or passing the problem to somebody else, right? If you sell an asset or indeed, by way of spin-off, give the asset to your shareholders, you've not really helped the climate change equation. You simply passed it to a new owner, right? So I think that's something that people are giving consideration to. In addition, it's exactly the same, however, in people allocating capital more generally, and they feel that the demand dynamics for their in markets may favor companies who got an offering that is more climate change friendly. So again, people are buying assets that allow them to do that. So if you're a packaging manufacturer, is your plastics, do you stay in plastics or not? If you do, is it recyclable, or do you move to paper, or what other? So I think boards are challenged with that, and similarly, I suspect Sir is asking the same questions with his portfolio companies. Again, and then you go back to some industries that are more fundamentally impacted by the climate change question, whether it be oil and gas, or whether it be electrification, whether it be automotive, and you've got their strategies being, or the industry, the ecosystem being redrawn, and therefore strategies having to adapt. So I think, Susan, it's having a profound effect on M&A decision making, and I would also hasten to suggest that actually gives rise to more activity at a time when people are trying to, like I said, reposition their organizations at a time when ecosystems are changing materially.
Great, thank you. Maybe we talk a little bit about antitrust, and maybe I'll lump protectionism a little bit in that, because we've seen sort of both things happening, particularly if you look in the US, as I'd say, there's a new sheriff in town, and the US antitrust environment is at least rumored to be changing. And we've seen moving antitrust environments in a number of other jurisdictions. I wonder how you see that, whether you think it really will be a change, or will it be business as usual? And if so, how do you see that change playing out? Carl?
I'm happy to take a crack at that one, Susan. Look, I'm sure there'll be some antitrust lawyers maybe listening in who would be far qualified, more qualified. But I think when we sat here last year and we had this conversation, the amount of political and media attention that the antitrust topic had received in 2020 was high, probably broke a standard. And just like the M&A market, I think it has hit a new standard in 2021. And I think the expectation is that that continues. I think you're right to point out in the US, where we've seen the Biden administration come in. I think there was an expectation that it was probably 50-50, that we'd get a continuation of a moderate approach to antitrust, but we've clearly ended up with a much more progressive approach to antitrust from the administration. And Lena Khan's appointment at the FTC is clearly evidence of that. Now, I would say that while we're seeing changes in policy, we've not yet seen enforcement action consistent with policy. And that's not to say it's not going to come, but we've not seen it thus far. So I think clearly a lot of this is initially been driven by the greater, or perceived, at least, it's not for me to say what it is or not, the perceived greater market influence of some of the larger tech companies, okay? And clearly that's been a very open debate by the Commission in Europe, right? That, calls these guys gatekeepers, and they need to be regulated. So I think, when we bring it back to M&A, Susan, I think, look, boards, because we've not yet seen enforcement action, and I think the debate is ongoing between boards and their advisors as to what's the implication. And I've had this view for a while that boards are willing to take the risk, announce a transaction, and see if it gets approved by the regulator, right? And it goes back to my earlier comments around some of these big strategic questions that are being posed to boards. And if they feel a transaction can help them move the strategic agenda forward for their organization, they'll announce that deal. There was a time a number of years ago when I think maybe a management team may have feared for their for their jobs if the deal ultimately didn't get done. I think the market's moved on from that. So until such time as we maybe see more enforcement action, I don't yet see people pulling back from announcing the deal. But we need to keep a watching brief on this, no question. That's on the antitrust side. And then I think the other one is obviously FDI. And clearly that, for some buyers of assets, it's challenging. And that's very real. So we are seeing that impacting deals getting done. And I think therefore it's impacting people's, even their appetite to consider deals in certain jurisdictions. And I think one observation that I've had during the course of this year was that often those deals are not approved in a very quiet manner as governments try to balance geopolitical relationships with the approval or not of transactions.
Cyril, as I was listening to Kyle talk about this, the antitrust environment and the potential impact on strategic deals, it made me wonder whether it opens up more opportunities for private equity. And I wonder whether you see that as an opportunity or just something that's happening.
Yeah, I don't know if it changes a lot the picture on the larger end of the market in terms of transactions, but yeah, definitively, I think being a financial buyer and usually less subject to antitrust issues than a corporate, of course, in some situation it can make the difference. I would say that a lot of transactions today we have seen where buy and builds, where potentially in the end of the day, the private equity player can behave almost as a trade buyer and potentially be subject to the same kind of antitrust issues because they just acquired one company and the strategy is to build on that. So I'm not sure I've got any statistic, but of course that's we are more agile, we are less conflicted, and the more the corporate are conflicted, the best it is for us in terms of competitive advantage, of course.
Well, maybe one last topic before I open it up for questions. I mean, of course, activism. This is an import to Europe from America, and it certainly landed on the European shores here. I wondered if you can talk a little bit about how you think that may impact M&A activity and whether we'll continue to see more and more activism. Anybody have a view on that? Carl?
Yeah, sure, Susan. So look, it's here to stay. It's not going away. And I think, look, we've seen a growth in activity in Europe. Europe makes up about 20% of all campaigns. The US still dominates at about 60%. So we're not yet equal in Europe with the amount of M&A activity we see here. But we are seeing high-profile campaigns. And last year, we obviously saw Third Point in Shell. We saw Elliott in both SS&C and GSK. So very high-profile campaigns. And the themes that are highlighted again are the same themes as we've seen before, which range from governance through to M&A in particular. So I would expect that theme to continue in Europe. I think what's going to be interesting is to go back on an earlier point that you made, is we've got rising rates. And as we see this rotation in the market, and today is a very volatile day in the market, that's a nice way of saying it's a really down day in the market. Many of these corporates that enjoyed, a re-rating of their stock during a lower interest rate environment, as that interest rate goes up and their stock comes under a little bit more pressure, I think there's more of a question on the board, okay, what can we do to generate value for our shareholders, right? So, and if they don't take proactive management of, for example, the portfolio, there may be an activist come onto that register. And that's linked in closely to, corporate carve-outs, which again, we've seen growing in Europe in particular, but more globally, but also in Europe, which has also been a very good source of primary deals for private equity. So we see this kind of, emergence of trends, right? Activism, corporate reallocation of capital, primary deals for sponsors, some of the things. So I think we're going to continue to see it, that traditional activism. And then what we're seeing more, Susan, is that going back again to another theme we talked about, which is ESG. We're seeing some specific ESG campaigns. We saw that with Engine One in Exxon during the course of this year, for example. But also we're seeing much of the index community, which people may have previously referred to as passive, but in the context of ESG, because these index funds are required to own the stock so that they can benchmark against the index, they need to engage with the corporates as their pension funds, i.e. their customers, are asking them what are they doing around the social and the environmental questions. So we're seeing more active engagement, quite almost ironically, right, from people who were previously called passive on the ESG topic. So I think this topic of activism, right, is broadening depending on the topic, and that's something we need to keep an eye on as we move into next year. And that then links back to your topic, your question earlier about how ESG is impacting M&A. Again, another convergence between themes.
Great, very, very interesting. Thank you. Well, maybe I'll open it up to questions. Scott, you're the keeper of the questions.
I am actually, and there's been there's been a number that have come through, not only in the Q&A, but one or two that have been emailed to me because it's students here on that. There is one. I don't know whether well, there's actually two related here on that. One of them is from somebody who just wants to know what is happening likely with China, especially with the protectionism issue that you mentioned earlier that's taking place. What do we see in terms of activity in China?
I think what historical activity? I don't know, Matt, whether you have any data or.
Yeah, I was thinking Matt might have something on that.
I've got a bit of data around China, specifically as it pertains to looking forward, really just kind of time boxing it into Q1, but may be indicative of larger trends. We are, predicting overperform on a year over year, sort of quarter over quarter basis, both from an M&A and IPO standpoint, both, sort of a little bit down, kind of sequential quarter wise, Q4 to Q1. And industry wise, which may be of interest to the question asker, kind of seeing biotech drive a little bit of that, at least from the data that we have purview into, with finance and manufacturing kind of dragging things down.
Okay, great, thanks. Scott, anything?
Yeah, there've been a couple questions about what the panel would see in terms of multiples on deals. Two questions coming at it from a different perspective. One who actually thinks that perhaps multiples should be coming down. The other one just being a general trend, and especially in the tech sector. So,
I mean, we have talked about valuations being at historically high levels. Anybody want to venture what might change them either?
Yeah, what these are both asking what the trend will likely be through the year and the outlook.
And why?
And why?
I can take this one. So we are expecting to see drop in company valuations, and it's not necessarily related to their performance, but it could also be like increase in interest rates or other macro factors. But that's not necessarily a bad thing for M&A. We've seen it happen in many companies, especially fintech platforms that went public in 2021. Their valuations dropped massively, like companies like Flywire, Robinhood, Remitly, and some believe that drop in valuation, especially if startups struggle to raise funds, can actually lead to more buying opportunities. So that could be a good driver for M&A.
Anybody disagree with that? That valuations might come down?
I think it's very much industry specific, Susan. So look, clearly, if you've got, businesses that are not, generating cash flow today, and a lot of their value is in that future growth, clearly a raise in interest rates is going to be challenging from that perspective. I think some of those companies that were previously kind of bond proxies, very strong dividend, solid top line growth, again, in a rising rate environment, you may see that go. But again, I think there's going to be a number of sectors that are going to continue to exhibit attractive growth in the near term and in the long term. I think they'll continue to be keenly priced as defensive assets at this particular point in time. So we still have good GDP growth expected, at least we're forecasting. We're clearly seeing some volatility right now, but I think the strategic need for corporates to restructure their strategic their strategic positioning if necessary, and also people like Cyril who've got a very large amount of dry powder sitting that needs to be deployed for value, but nonetheless deployed in a competitive market. I think we'll continue to see valuation supported. But look, we are from a trading point of view continuing to see very, very strong multiples. So I think it's not difficult to say we may see a softening, but we've been saying that for many years now, and the market has come forward. The big question clearly is inflation and interest rates, and I think we're all scratching our head as to what the impact is.
I would just add what we have seen is that that's not the first. The rationale would be for the valuation to go down. Maybe if there is inflation and so on, some valuation should go down. But we don't. There is a lot of dry powder, and that's a key point as well. We have seen that for all COVID during the COVID. Basically, there is a flight to some quality being depending on what the environment is, and today there is a flight to buying price makers, for example. Being able to pass the cost increases to their clients, and because of the tons of money which have to be deployed on the private equity side, for example, and the limited number of sectors and targets potentially able to show those characteristics, there might be some areas where basically just the balance between buyers and sellers makes the price stabilizing or even potentially increasing. I don't know.
So I guess the answer is maybe up, maybe down.
Exactly.
It depends.
Yeah,
Great.
or as Cahill says, depends on industry there on that. Susan, there's two questions, one from an alumnus and one from a current student, self-identified as such, both which deal with cryptocurrencies, which I thought is an interesting one, and if I try to combine the two of them, one is a question that related to, do we think that paying with crypto might replace cash in M&A deals in the future? And do we see, therefore, the cryptocurrency industry as being a way to be able to affect deals taking place? So probably not one that the panel might have thought about. So here's one to have people think about it. So.
I mean, Marie-Laure, you raised crypto in your original discussion of which industries might be moving forward. What do you think about that?
I mean, as I said, it's very, cryptocurrency is very volatile, and I mean, like today the market was all red. So but also, I mean, there's been an interest in cryptocurrencies before, and it like M&A transactions in that space was really big, was really large. So we are seeing more interest from investors, but again, there is uncertainty because it is so volatile. I don't really. I mean, it might go up or might go down. I'm not sure. It's we'll see.
I think.
Sorry, I couldn't be more helpful here.
I think, Susan, what I would say is that, I'm no expert in cryptocurrencies, but I think what we are seeing is that the underlying technology, right, whether it be blockchain or otherwise, is having a more profound impact on a lot of industries. Okay. And I think people are viewing the technology and the ecosystem as being a more efficient way to restructure, supply chain, settlement in other industries. So we've already seen some deal activity in that respect, right? As people try to, buy the technology or apply the technology in industries to try to find efficiencies. And going back to the theme I said earlier, was kind of redraw the ecosystem within industry. So I wonder whether the more profound impact around the technology will be found away from the Bitcoin and more on how it, more fundamentally impacts industries.
Right. Great. Scott, maybe one last question.
Okay. I had one that I wanted to ask at the end, but we'll see if we can deal with this other one first, because I think it was an interesting one. How will the way that M&A deals that have changed over the past several years with the use of remote due diligence, Zoom, virtual data rooms, and so on change once we're past the pandemic, or is that now the new norm?
Happy to take that one. I think we've seen a lot of changes. You referenced a lot of them, having to do a lot of due diligence remote. I think sort of the pure remote, due diligence process is behind us. In most cases, I think we're back to on-site visits and, in-person management meetings, whether they're in a park or in a restaurant, TBD. But I think a lot of the efficiencies that we saw coming out of remote due diligence and rethinking, how many times do we need to travel? How might we be able to, put a management interview on video and maybe kind of, avoid 2 or 3 extra meetings or, extra site visits by, videotaping a facility tour, things like that. I think we'll just see some of those things that just added efficiency and speed to the M&A process, kind of compressing diligence times, trying to get a lot done, in a shorter time frame. Some of that's just going to be here to stay, pandemic or no pandemic.
Great. Okay, this is what I usually do at the end. So I go around the table and I ask everyone whether they think the business is going to be better than bigger than 2021, or will it be down in 2022? So let's see, how will I do it? I could do it by my screen in order. Scott, I might even give you a chance to answer that question. Maybe I'll let you go first, Scott. What do you think?
Okay, then you're putting me, I should have stopped my video and said I'm only doing the questions here. I think that there's so much in it, and it relates to a point that Cyril mentioned, that there's so much dry powder. There's so many strategic reasons to do deals, whether it's industries digitizing, whether it's climate, whether there's things that are even driving from the diversity and inclusion side, that companies have to change so fast. They're not going to be able to do it organically. They're going to have to make acquisitions. So I'm very bullish on M&A. Probably not surprising also given the role that I have. And although I'm not necessarily sure it's going to be 5.8 trillion, which was the figure, but it's certainly going to be, if not the largest year ever, the second largest year ever. So I'll put my neck on the line with that one.
You'll say maybe up, maybe down.
No, I say I say flat to slightly down, but not but probably not as robust as last year.
Marie-Laure, what do you think?
Well, I agree with Scott. So 2021 was exceptionally busy for M&A, and now despite Omicron and interest rates, inflations and disruptions in supply chain, I think that the environment remains a good one for M&A. So it might not be another record year, but I think that the trends that have shaped through the pandemic will continue their course. So I think that the momentum will continue to 2022. Through it might not perform last year, Yeah.
Cyril?
I would say that for the moment, I think the indicator we have in terms of deal activity and so on are quite strong. If I see that from my window, I think the start of the year is very, very busy and our pipe is very dense. But after that, the rest is really crystal ball. If something happened in Ukraine or whatever, there can be shocks we can't really foresee. So I would say there are hopes that that will be a resilient year. And I bet for, let's say, a flat to slightly down market as well.
Okay, Matt?
Yeah, I agree by and large with the rest of the panelists. I think, the optimism is still there despite, projected interest rate, increases and the turbulence we're seeing in the equity markets. I think all of that probably adds up to, maybe not another record year, but I don't think that should be, taken as, a negative on the market, given how much of a record year we're coming off of. We can still have a second or third place finish and that be a lot of deal value, a lot of deal volume. And that's, more or less what I'm expecting.
Great. And Colin, you get the last word.
Yeah, look, I think you'd be a brave person to say that you're going to, we'll have a 6 trillion M&A market next year, which would be up, right? Particularly given the fact that we got the volatility and some of the headwinds we talked about, geopolitical and tightening. But I wouldn't underestimate this market either, right? And look, let's break it in two. Just to add a little bit, I'm very positive on the outlook for the private equity market, continually a growing share of the overall M&A market, above 30% now. I think for the reasons Cyril said earlier, I'm very optimistic that those guys could have a bigger year than 2021. And I think the corporate activity is very much linked to where the equity market goes, right? So I think strategists had the equity market up approximately 10% this year. If that ultimately happens, I think we've got a fighting chance to be above where we were last year. And I would say, even though last year was a record, M&A volumes as a percentage of aggregate global market caps was very much in line with trend, right? So, volumes that we're seeing are consistent with the equity market valuations we're seeing. So it's not like we've had an exceptional year, but the underlying trends, the underlying deal flow, relative equity market valuations, relative to dry powder, it's not exceptional. So look, it's just, will this taper tantrum affect the M&A market and underlying confidence of boards and investment committees? I think probably more on the board side than the investment committee. So I'm probably with my colleagues in the panel to say that, I'd be positively surprised to be up, but more likely as I'm looking at a second place finish relative to history.
Great, well, thanks. I think it's all very clear. Good. Well, thank you all for participating, and thank everyone on the phone, on the video, on their computer screens, wherever they are, for joining us today. Scott, did you want to say anything?
And Susan, thank you so much for once again chairing this session, but also to Cahill, Cyril, Marie-Laure, and Matt for your comments there. Can I just remind everybody that this event has been governed and run under modified Chatham House rule, and that is that although it is public information that the panelists are participating here, if anyone wishes to quote or reference any comments that they have made, either or their organization that they represent, please do check with them specifically and gain their permission first. And with that, I would like to thank everybody, including one or two of the students who have asked questions who I will have to face on Wednesday and say, why didn't you ask my question? But I guess I'll have to probably do that in class. But again, thank you to everybody. And hopefully we'll see you all here next year, same time, same place, or maybe in person. Thank you.
Thank you all.
Thank you.
Thank you.
Thank you.